The next pattern we're going to go through and discuss is the familiar pattern. Now again, this is one of my favorite patterns. It's a trend-changing pattern, and it's not named after Dr. Familiar, a very good friend of mine and a good friend of Woodie CCI Club. The familiar is basically a zero-line reject or a double reject of the zero line, as which we know it as major support and major resistance. And that's the whole psychology. It's a test and retest of major support or major resistance. There are two triggers on the familiar pattern. One is taking out the swing high or swing low, and taking out the zero line. So that is the whole psychology, a test to retest, a major support, a major resistance. And why I named this the familiar pattern is because Dr. Familiar, as I said, was a friend of mine, a good friend of Woodie CCI Club, and he thought this pattern reminded him, being that he was a cardiologist, of an EKG. So he would love this pattern, and when this pattern was formed, he would always call me on the phone and say, "Woody, get in that familiar pattern, get in that familiar pattern." So that's a little bit information behind this particular pattern. Many times you'll see a familiar pattern developed after another trend-changing pattern, say a Vegas pattern or a ghost. Lots of times you'll notice this familiar pattern develops after a ghost or a trend-changing pattern like a Vegas pattern. Okay, here are some trade setups and some examples of a familiar pattern. One, we had an uptrend, nice trend, we come down, we rejected the zero line the first time right here, we went up and we come down and rejected the zero line the second time. Now, as I said, there was two triggers. One, taking out the swing low, or taking out the zero line, which is the one I like. The second thing that you have to have is you must have the LSMA in agreement with the trade. In other words, we're going for short, we're looking for red here on the LSMA. The second thing you got to have on the familiar pattern is that this all has to take place within the 50 on the CCI, within the 50s on the CCI. You don't want to go outside, because staying inside gives more psychology to the pattern of a test and retest of the zero line. So for a short, this is what you'd be looking for as a setup. Now this is the trade. As you can see, taking out the swing low, or if you go on this bar, taking out the zero line, you'll get in the trade here or here, depending on what trigger you use. I personally like to see taking out the zero line because that's taking out major support or major resistance. And that is the entry that I personally like to use, but you can use either one. It happened inside the 50s, which is what we had to have. And we had the red LSMA, and you have a nice trade to pick out for a downward move. Now that's the familiar short. And this is a familiar long, same scenario. We had a nice downtrend. We went up, rejected the zero line the second time. That would be my entry bar there, crossing the zero line. A lot of people entered, taking out that swing high. As I said, there are two triggers, so you can use what trigger that you feel the most comfortable with. That's the most important. But anyhow, you had a downtrend, and now you can see that things are changing with a trend-changing pattern to the upside. As I say, many times you'll have this form after a ghost and and a Vegas pattern. Lots of times you'll see that to happen. So just remember there are two triggers, taking out the swing high or swing low and taking out the zero line. All right, let's look at that trade as it worked out. Taking out the zero line and the swing line, you're in it here or here depending on your trigger. And you can see good angle, and that's what you would expect it to happen. Exactly what you expected to happen. You have the green LSMA for longs. That's what you got to have. Now let's look at on a chart here. This is Vermeer long. Here's your Vermeer pattern right here. We had a downtrend. We went up, rejected the zero line, and then come back and reject it the second time. We had green on the LSMA. Broke the swing high, had taken out the zero line right in this area here, and took that trend changing pattern all the way to the upside. We were looking for shorts here. We're now looking for longs. And the intermediate pattern was a trend changing Vermeer pattern. This is a great pattern, and 16 years of putting these patterns together, the Vermeer pattern is one of the most prolific with a high probability trades, and always ranked either number 1 or number 2 out of all the patterns. So Vermeer pattern is a great pattern to trade. It doesn't make a difference what you use it on, whether it's indexes, futures, commodities, stocks. It works on everything. Now here's another Vermeer long on the euro currency. Again, we had a downtrend, reject the zero line. We didn't cross it this time, but we did reject it. Then taking the swing low, the swing high out, excuse me, or taking out the zero line was the trigger. Again, look at the nice angle. Get in the trade, and it moves all the way up to extremes. Now remember what I said about extremes, put you in an overbought, oversold condition. You'll notice here, we got up here, and the CCI turned because the prices were not moving as fast, and the CCI measuring acceleration saw that and started to turn down. And though even prices started to go back up again, the CCI took a while before it turned back up, and then prices went back again. So you'll commonly see that happen. What you got in was an overbought condition, alleviated the overbought condition. We got another pattern here to go along, and you can see we just follow that up from a trend changing pattern. Okay, now here's some examples of the Vermeer pattern, and we'll run these live so you can get a good look for it. Let's just go through what we need for a Vermeer pattern to work. Number one, we needed a trend, in this case a trend to the downside. You can see it on the price bars if you need be. If you don't look at the stinking price bars, you can see we've been below the zero line for more than 6 bars. Number two, we must have a reject of the zero line and a test or retest. And number three, a trigger is coming past the zero line or taking out that swing high. And there's where we are into this trade, right there. Stop 1 or 2 ticks below the entry bar. Let's see how this all works. And again, look at the angle of the trigger coming across the zero line. Nice sharp angle, boom, right up to the plus 100 above it. Look at that. Go. Little downturn, CCI turns right back up again, and then it comes back again. And exit crossing the 100. So that Vermeer pattern right there, beautiful trade. And you can see the angle, how important those angles are. Now, what was a clue that this was going to work as a trend changing pattern? We had solid brown on the chop zone indicator. All of a sudden, we got light brown. We had a good, strong downtrend with a green chop zone indicator. All of a sudden, we get yellow. We have a possible zero line reject that really didn't have enough CCI points to be a zero line reject that we take. So there was 3 clues that this trend-changing pattern was going to go. Again, if you watch the CCI, it tells you a story. If you let the story tell you what's going on, it helps in your trading. You don't have to watch price bars. The CCI tells you this story. Trend-changing patterns more than anything else. Because we were looking for shorts, and now we're looking for longs. Let's just take a look at that again. We're in this, oh, excuse me, I went back. Let me go back a slide here. Okay, here's the one. We're in this long at 8:34 on the Russell 5-minute. And we'll start this off at long at 8:34 on the Russell. Again, nice angles. We got the clues telling us that this could go. And sure enough, 8:34, we were up here at 8:36.80. That's 28 ticks. 8:37, 30 ticks. Better than 30 ticks on that Russell 5-minute chart. So again, beautiful, beautiful trade. Now I'll get to the next one. Okay, here we have a DAX, again, a 5-minute DAX. We have a good uptrend, nice strong uptrend, and we have kind of a pullback. We get a clue. The zero line reject isn't going to work. We also have red showing up on the sidewinder, showing that maybe it's possible time for a trend-changing pattern. We also have a series of red dots on the LSMA, meaning we're below the LSMA. So all these stories are being told to you right here. And that says that you have a good possibility of this trade working. What is another good clue? Look at the angle breaking down through on this Vermeer. Now this Vermeer happens in the 50, but it rejects it here and then rejects it here. So just because it's not close to the zero line, as long as it's inside the 50, it's still a Vermeer pattern. So this is a short. So let's take a look at this now. The clues were there. The trade is there. All the things are in place for this trade to work nice for you. Again, look at the angles. Watch the angles. Look at that. Isn't that beautiful? As a trader, you're really sitting there, as I say, fat, dumb, and happy, and really feeling good about this. Money in the bank. And remember, we have to say thank you to the other people on the other side of our trades. Coming across the minus 100 is a good exit. So plenty of clues there, people. Plenty of clues that tell you this pattern might just work as a trend-changing pattern. Now people say, well, that's a counter trend. Not in a momentum indicator, it is not. Because it's measuring the buying and selling coming into the market, it's telling you that there's a possibility that there's more selling coming into the market, and that's why it's a trend-changing pattern, revolutionary to trading. Again, let's just go through it with short 81.02. Nice angle down. 1 or 2 ticks above the high or the low, in this case above the high of the entry bar. Doesn't even get close to stopping us out. Thank you very much. Down into extreme, the hook from extreme. Continues down a little bit more on bar closing there. And eventually we get to an exit point. So a real nice trade. Let's take a look at one more here. We had a nice uptrend, not quite as strong as we like to see, but you can see we had some really good momentum going up that we got into extremes. And we come back down again, and it was kind of a Johnny-come-lately trying to push it back and can't do it. And we had like a failed zero-line reject here. We also had red on the sidewinder, so saying that the move to the upside did not have a lot of trend strength behind it. We got red dots on the LSMA, the least square moving average, to take a short here on gold. Again, look at the angle breaking the zero line, which is major support. Now let's take a look at this trade. Again, watch your angles. Look at that. Look at the angles. A big bar and actually come right back again, but then continued to the downside, didn't it? Continued to the downside. You'll also notice that we're now down below the minus 100, and then coming back through the 100 is a good exit. Or if you stayed with it because it wasn't a good angle, you can continue on to that trade. Some people will exit here. If it's not a good angle, some people will stay with it. That's good trading if you have done your stats and what you feel comfortable. That's exactly what you want to look for. So again, let's go back to the beginning. You'll notice if we put our stop 1 or 2 ticks high above the high and at least a minimum of 10, we never even get touched on our trade here. Attempt to make it go up again, but they couldn't quite do it, and all it does is continue down. Nice angle down, breaking the zero line, breaking minor support. You notice it got right down almost to the 100, went sideways for a bar, and then broke through the 100, and then come back again, not at a good angle, and then broke away from that minor support and turned into a very, very nice trade. Crossing back through the minus 100, nice exit. Some people will get out at the bottom here at a hook from extreme. Also, we had what we call a flat top or a flat bottom, which usually shows a definite stop in momentum. And a lot of times when you see a flat top after a move or a flat top after a good move down or up, it's a good time to exit a trade. So a lot of people might have exited this trade here and saved themselves some ticks. So again, if you read the CCI and the story the CCI tells you, you'll be way ahead of the game. Is it 100%? No. But it gives you that probabilities, and that's what you want as a trader. You want that probability. So let's just take a look at that again, and we're talking at gold here. We're short at 653.50. And let's take a look at this trade as it goes. 653.50 is our entry at bar close. Some people will get a better entry. 653.50, we're down here at 653.10, so it's definitely going our way. New low, 652.10, excuse me, 52.80. Continuing down, 651.90, 651.10, 651.10 still is the low, and we're out. So again, a nice trade on gold. A Vermeer pattern, 2 triggers, taking out the swing low or swing high, and taking out the zero line, trend changing pattern. Here's another one on live hogs. This is a 5-minute chart on live hogs. For some of you people that trade commodities, as I said, the CCI works on many things. Here is working on live hogs. Okay, we had a nice uptrend. You can see it, nice uptrend. We had a pullback, you know, a dip, and it wasn't quite ready to go. And yet, we still had 2 clues, actually 3 clues, that this Vermeer pattern would work. We looked for a Z shape or sideways S, which we had. There was a zero line reject here that we probably wouldn't take because it didn't have enough CCI points. We had a lot of red dots on the LSMA. You notice yellow showing up on the sidewinder. And so we had a lot of nice clues there that tell you that this might go for a nice hog trade for people that like to trade commodities. Watch the angles again and see how this works through. We're looking for shorts here. There you go. Look at the angle. Boom. 1 or 2 ticks above the high or low of the entry bar. We never get stopped out. And it just continues down, continues down. No reason to get out of the trade until it crosses the 100, right there. Beautiful, beautiful trade. That's on hogs. Again, let's go through the clues. A little yellow on the sidewinder. Zero line rejects that didn't work. A lot of red on the LSMA. Crossing the zero line. Look at that thing go. Beautiful pattern. And as I said, it works on all types of vehicles, whether they're indexes, futures, commodities, stocks. Same pattern works on all of them and all time frames. It ended up at 793.97. We did get down to about 73.80 something, and we got in this trade at 75. That's 2 points at $500 a contract per point. That's about a $1,000 trade right there on live hogs. Wonderful trade. Again, look at your angles. Look at that thing go. As a trader, there's nothing better in this world to get in a trade and it immediately takes off like this for you. And this is again what the CCI can do for you as a trader. Beautiful trade, beautiful pattern, works on everything. And so the Vermeer trade is something that you might want to put in your arsenal, learn how it works, do stats on it. Vermeer trade, a very prolific pattern, and has been for 16 years of my stats.